everyone, and welcome to this week's edition of Mish's Market Minute. I am your host, Mish Schneider, and once again, I always like to thank StockCharts TV for giving me this opportunity to spend the next 29 to 30 minutes with you. So what we're going to do today is we're going to look at banks and banking stocks because there's an interesting direction in banks right now that is including not just the traditional banking, but also a lot of these banks that are getting involved in other types of commercial services. So that's what we're going to talk about. With dividends rising, stock buybacks returning, and yields tightening, the traditional banks are definitely worth looking at for new positions. We have skin in some of that. But I also want to take a look at the banks that offer commercial services in both fiat, which means any currency declared by law, and crypto, including staking, which means using coins while earning a dividend. Crypto coins, that is, lending, which means you can post your crypto as collateral to borrow either fiat or other crypto, and then 24/7 liquidity instead of the typical 9 to 5 wire functions that we have seen with traditional banks. So as always, here's the list of the instruments that I hope to cover with you. SI, also we're going to take a look at Square, but Coin, which is part of SI, by the way, which is Silvergate Capital, is not a symbol yet. It should be in a week or so. We're also going to be taking a look at all the other ones here. I'm not going to read them. It'll be obvious as we go along. And also I want to take a look at a couple of the trusts related to both Ethereum and Bitcoin, since right now we're seeing that space boundaries get narrower and narrower. So let's start with this particular instrument here. This is Silvergate Capital Core, SI, and you can see here that we have a divergence immediately. We're looking at a divergence between the real motion indicator, which is below the 50-day moving average, and the price indicator, which is above the 50-day moving average. So it's always a matter of deciding whether or not you want to think that the momentum is just low and will catch up, or whether or not you think the momentum is giving some kind of a fair warning. But we will also see here that is showing some leadership against our benchmark, the SPY. So if we let's drill down a little bit on the momentum, in that even when this was making new highs here, the momentum was the strongest. But then as this was correcting, this broke the 50. And even when we went back and tried to test close to those new highs, the momentum never cleared the 50. So clearly what we're looking at is this may be a really good opportunity to get involved with the banking space related to the crypto world. But I would have some level of caution here until I started to see more momentum. Now, the good news is that we are back above the Bollinger Band. So I probably maybe give this a little bit of time to see if we can clear back over these levels here where these two price points are dotted. And then at that point, I would assume that we'll also see this move above this high here. So we're also going to want to see this 164 level being taken out. So I would definitely confirm before I got involved over 164 that the momentum is also starting to come back. And then, of course, you've got a big move here to the 50-day moving average at 138. So literally, you're going to be risking like $18. But this is the kind of thing where if you do that and say, can I make another $36? Really, basically, if you're a believer in the whole idea of these banks getting involved with companies like Square and Coin, then that would mean that this could potentially power on to new highs. So at this point now, I'm going to say aside on this. However, if we move to Square, when we look at Square here, again, interesting about the momentum in that it had cleared the 50 when this went on to make new highs. And even when this went back over the 50, this did not clear. And now we're sitting here right at the 50 as this is starting to power forward again. But we're also seeing good leadership here. So essentially what we're looking at right now is we can anticipate that the momentum is going to continue to increase on this one. So what I would probably want to do now is risk very little. Now, once again, interestingly enough, you can see that the moving average is at 238. 250 though should be some temporary support. So if you were interested in getting involved in this one and you wanted to say, well, gee, if it closes out the week above these levels right here, which looks like it's just about the low at 253.70, if it closes above that 253.70, maybe take a partial position here and be very nimble if it breaks 250 until you start to see that momentum coming. But you can see overall here that chart in square looks really, really good. Now another one is GreenSky. And this is technology and software that has to do with also with the crypto space and banking. So I like this one a little bit here because we're sitting right under the 50 and the momentum has sort of been in line on these big spikes here. We broke the 50 like intraday, but closed above it. And now it looks like one little push in price, it could actually move higher. So this is actually probably so far what I'm talking about, the clearest in terms of the risk reward. Now we're looking at an inside day as I am speaking to you, which means that the range today that I'm talking to you is inside the range of the day before, which means at this point now, I would probably want to see this take out 639. And then I think you could actually risk to under 6. You can see the low yesterday was 596. So maybe I'd give it a little bit of fudge here and say at around 589 would be the risk if it takes out 639. And again, I would want some confirmation, but at this point, it looks like it's actually following in line with what is going on here in real motion. SBNY is another one that's showing a negative divergence. Interesting here. I mean, it's what's part of the reason why the market is getting tighter and tighter and harder to trade is because of the fact that we're seeing divergences in momentum all over the board, by the way, including divergence even in the Russell 2000, which was leading and now is showing a negative divergence. And we have some issues now clearing back over this 50-day moving average. This is good information. In order for you to trade anything, unless you're dealing with something that goes completely counter to the rest of the market, like commodities, for example, you really want to have a macro picture here. And so it doesn't surprise me that we're seeing this sort of divergence again, sitting right on the Bollinger Band. So once again, with something like this, I would be a little bit cautious about getting involved until we started to see more momentum here. And to me, that would also mean that would have to clear this 230.45 or take another visit down to the 15-day moving average, which is right now at 216, and see what it does there. Now, going more traditionally, but yet a bank that's also trying to keep up with the times is JP Morgan. And the same thing, JP Morgan is sitting under the 50-day moving average in momentum, certainly not outperforming the benchmark. And you had this interesting spike top here that reversed. And now, really, quite honestly, in order for this to be very convincing, you'd almost want to see this clear 160.75. And then you'd have a far risk to the 50. So you'd probably want to be looking more at between 150 and 155 as the risk. But you also really want to make sure the momentum clears here. So a lot of this stuff is still holding up very, very well. But on the other hand, is looking a little bit tired. Now, if we go to Santander, this is one I showed you a while back when we looked at alternative ways to trade the crypto space. And again, under the 50-day moving average, not outperforming on the benchmark, but sitting on the 50-day moving average here in terms of the price. So again, what this tells me right here is that unless we start to see momentum catch up and maybe get a move back over, let's say 355, it's possible that we're going to ready to see a little bit more of a correction, or at the very least, the price just sort of goes sideways here. But nonetheless, this is a nice inexpensive stock for those of you who like to trade inexpensive stocks. And if you're looking at this one right now, I would say you either wait for the momentum to clear the 50 to see where the price is, or at this point now, wait to see if this breaks down under the 50 and comes back through, because then you would have a much cleaner risk. Like, for example, right now, if it breaks down under 345, which it's sitting right there, goes back down, say, to closer to 330 and then turns back around, I think that would be a good sign as well. Really, right now in the whole market, we're really talking about controlling risk. So in Bank of New York, Mellon is another one that's getting involved with the crypto space. And once again, we have to be looking here at the idea of the fact that we just had a big spike up here and the momentum is okay. But look at the momentum here when it was making not as high as it is now, but a higher momentum versus here. However, of what I've shown you in terms of the bigger banks, this still has the best momentum because it's here over the Bollinger Band and over the 50-day moving average. Hasn't quite, just now starting to show some leadership, interestingly enough. So for this one, I'd probably want to be a little bit cautious about buying up. I'd rather be buying it somewhere around 47 and then risk to under the 50-day moving average. At this point now, I would just let that go. The next one is Visa. And with Visa right here, we have also a lot of action with crypto. It's getting an inside day as I'm speaking to you, and the momentum is definitely better than what we've seen. And in fact, we're not really seeing any divergence here because the momentum was strong here, sold off, and now the momentum is holding up here. So this is another one that you might be interested in taking a look at. And in this case, I would say we have a pivotal area here. If you look back in time, this 220 level is somewhat pivotal. And right now it's trading just over 220. So that kind of makes it simple. If you're a more active trader and you're looking at this on Monday, if it takes out 223, you can look at that 220 to 219 level as a risk, unless you really want to sit and hold this. And again, that's going to have to do with market conditions, in which case now you would be looking for some kind of support around 213 as the moving average here starts to move up. But this one, not so bad. Next one here is Mastercard. And Mastercard, this is all related to banking, by the way. Again, starting to show some signs of strength here with the momentum coming back. So the credit card companies are interested in here, which also doesn't necessarily surprise me either. People have been very light in terms of using their credit cards. They actually have paid off a lot of debt, saved more money. And so it's possible as we get closer into the summer months and the spending months, and especially as people can travel again, that these credit card companies will start to do better. And I think that's what we're seeing here. Forget about their relation also to the cryptocurrency space. We'd like to see the Bollinger Band clear the we'd like to see the price clear the Bollinger Band. We'd like to see a little bit of leadership start to emerge here in terms of the benchmark. And at the same time, we'd really like to see this hold at these highs here at around 367, 368. So that's the area I would be looking at. And again, I wouldn't be in a big rush to get involved in these things until next week. Now, BlackRock is another one that's doing really interesting things with the whole Bitcoin space. And look at that. This thing has just exploded and actually has gone to new all-time highs. Momentum is doing okay, not amazing. Look at the momentum here when the price was lower versus the momentum here. But nonetheless, at this point, I'd say you sort of missed the boat unless you wanted to do this for a more active trade. And if that's the case, then I always like to use the former swing highs. So that's 784. So 784 would really be the area you either want to see dip and hold, or the area you'd want to risk to if you continue to believe that this thing can go up and up and up. Now let's go more traditional here for a moment and look at XLF, which is the ETF for the big banks in general. And right now this too is looking pretty good here as it went and made, let me make sure this is a new all-time high. I'm not sure on that. Yes, it is. This is a new all-time high, I believe. Let's go back a little bit here. Let's go back to the last 10 years. Yeah, this is a new all-time high. So let me just take my chart. Just wanted to make sure before I tell you something like that, that this here as a new all-time high, what's interesting is that the momentum is not great either. So chasing these highs when you have waning momentum could be a little bit dicey to do. So just be careful if you're going to get involved in any of things, and more use it for information. So for as far as I'm concerned, this 34, 35 level is a key for this to clear. And at this point now, if you were to, let's say, think that this could really continue to rocket higher, and I am overall bullish in the banks if the market holds up, then I would try to find some tighter stop. Now, it's not too bad to go down to under 32.88 at this point, but it looks to me like you have more interim support here at around 33.70. Now, let's also look at the other ETF banks, and this is regional banks. This is part of my economic modern family. Now, the regional banks are not doing as well. And again, regional banks are more reflecting the actual urban areas, people that live in the smaller towns and do their banking in smaller banks. So these are going to be like the Fifth Street Bank, etc. But nonetheless, again, momentum declining, not showing any kind of leadership, but is holding above the 50-day moving average. So I would also want to see some momentum coming back into this. And I probably want to see this take out 68.15, that last swing high. And then you could probably look at 64.50 as your risk to see if this can continue to rocket on as well. Don't forget the banks were really big laggers throughout the whole several years. And only post-pandemic, when I say post-pandemic, since the market has started to rocket higher again, are we starting to see some of these banking stocks really coming back. Okay, now this one here is Bank of America. It's consolidating here near its highs with good momentum. So this looks pretty interesting here. Obviously, you can't risk all the way down here. However, I would say if we were looking for some kind of a pivotal point, I'd probably look at 38 as my pivotal point. And clearly, if we can take out these highs of 40.30, this looks like this continued to do very well. So you can see here, all these banks are just looking strong. Here's Morgan Stanley. Now, Morgan Stanley, not quite as strong as Bank of America, but nonetheless sitting on the 50. And again, momentum just nagging. Like to see the momentum at least clear back over the Bollinger Band, and this has to hold 78. So that makes the decision pretty simple. Watch it for a couple of days, see if the momentum picks up. And if, let's say, this gets through 82, you can always use a risk to 78 in the Morgan Stanley Bank. Now I'm going to show you Wells Fargo, which actually is not listed here in my symbols. But the reason why I want to show you this one is because this is the one we actually do have a position in. We have been long Morgan Stanley for a while now. We actually got long at 31.27. So we started buying this in this area right here. And we added down at around 39.50. So we actually really believe that this thing can continue to power up. It is above the 50-day moving average, which is good, but not quite at the Bollinger Band yet, needs to clear that. And right now, if we are actually using a risk at 37.34, but I would say it's probably okay to lower that risk a little bit to under this 50-day moving average, which is just under 37. I believe that Wells Fargo can get its way up to 44.45. What's interesting about Wells Fargo is that if you look at a weekly chart, and our moving averages are different than the ones on StockCharts that I'm using, but if you did look at a weekly chart, you would see that this has not gotten anywhere near the 200-week moving average, which is sitting at around 45.50. We believe that at some point this will actually go up there and test that level. So that's something to keep an eye on. The next one here is Citibank. So we're going through all the big banks. And again, sitting on the 50, that's not bad, but above the 50 here. So once again, momentum, so I would keep an eye on it, but it really needs to hold above 60, 70, 68.50 would be the ultimate. And again, I'd like to at least see this take out some of this recent work, let's say clear this 73.24 level, and then you could probably use anywhere between 69 and 70 as your risk point. Okay, so now we're going to look at Berkshire Hathaway. There's actually a BRKA and a BRKB, but we're going to look at A for now. And again, now a leadership, even though you would think with the price up here, and also kind of waning in momentum, but at least still holding over the 50-day moving average. You could see there's some good resistance here at 400,000. Now, this is just not a stock that I will ever trade because the numbers are staggering. But nonetheless, I think this is a good indication in terms of the financial space and the reinsurance space and the work that they're doing now in getting involved with alternative currencies as what the future looks like. Clearly, momentum or not, all of these are prospering from that future. I also wanted to take a look at American Express, since we looked at Mastercard and Visa, because American Express is another one of those companies that is starting to do well. The momentum isn't quite as strong, but still holding. And you can see 150 here as the high is not too far from its crosshairs. So I would not get involved unless it took out 150 at this point, because you're buying right into resistance. Or if we see any kind of correction, probably around 140, and then I can use that 50-day moving average as a risk point. But just again, it's just showing you here that if you have any doubt, even though you can look around the board and see how the rotation into different sectors has been impacting the market overall, the point is that the financial sector is looking very promising. And unless we have some major incident here, and of course, the biggest one being inflation, even that, the yields rising is something that these banks like. In fact, if we take a look, also not listed as a symbol, but if we just take a look at TLT here, you can see with TLT, this actually has had a huge downtrend here. And at this point now, it's struggling to hang on to this little base here. But if it cannot clear back over 138.50 and starts to break down, let's say under these levels of 135.50, then I would start to say that the yields are going to tighten here, and that would only be more bullish for the banks, by the way. On the other hand, if the yields soften and continue to soften, doesn't necessarily mean it's negative for the bank, but it will be interesting to see what happens, in which case then you would want to see this clear over 138.50, and then of course your next test would be what happens with momentum and whether or not it can clear this 50-day moving average. All right, couple more to go. Let's take a look at Goldman Sachs. Goldman Sachs has also got a momentum that's under the 50, not really showing any leadership, but yet it's over the 50. And so once again, it would have to clear some of this recent resistance, probably more looking at 335.50, or takes another trip closer to 320.40 right here. These things are just in between, which makes sense, waiting to see what the market does next. So the last two instruments I want to show you here really have more to do with Bitcoin and Ethereum in terms of the trust. Now, GBTC is one, and I was just reading that Millennium Partners, which is one of the largest hedge funds in the world, is actually starting to consider putting some of their assets into GBTC, which is the Grayscale Bitcoin Trust. And right now, again, it's above the 50 while the momentum has declined and the performance hasn't been there. So this to me is probably waiting for Bitcoin itself to clear back over 60,000. And if that happens, I think you'll see this take off. So I would keep my eye on this as we are. If it can hold up here above this 47, and crypto can hang out over 57, 56, 57 and clear 60, then this would actually be an interesting opportunity to get long. The most recent high at 53.50 would have to clear ultimately, but I think this still looks like it's basing out and basing out, just waiting for some momentum to come back to take off. And the last one I'm going to show you here is the trust for Ethereum. This is the Grayscale Ethereum Trust. We also have skin in this game, by the way. Momentum is much better here. So some of the thunder has been gone out of Bitcoin into Ethereum. And Ethereum is, you know, the blockchain technology. It's the fuel and it's a currency. So it's both. That's why we got involved in this. And I believe I even told you about this a while ago. But nonetheless, momentum looking good. I believe now that if we can get through these recent highs of 2063, you can be easily looking at a move back up to 2250 and maybe even beyond. We definitely like to see this leadership and momentum continue. So overall, in summary, the banks in general look good. The momentum is declined here along with the whole overall market, which is okay. Hopefully we start to see that come back, particularly as we get into the middle of February. But remember now, you've got commodities up a lot, but you have the financials up, you have the yields sort of steady, but looking like they can really go either way. In this case, I would say probably higher, if anything, in anticipation of inflation. And you've got Bitcoin as the big social disruptor here, not only to the financial area, but really basically to all area here, and also in the actual currency itself. So keep your eye on this going forward. Hopefully I gave you some good actionable information, at least what to watch for. Like I said, my favorites here right now would be GreenSky. I like JP Morgan. We're already in Wells Fargo. I think you should be taking a look at some of the credit card companies, particularly Visa, and definitely these two Grayscale trusts that I showed you in the actual currency itself. Okay, with that, I hope you have a great afternoon. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.